Billionaire investors are currently deploying autonomous systems that manage nine-figure portfolios and monitor global markets while the owners sleep. These software frameworks are designed to operate as digital employees, handling complex business operations without constant human oversight. A typical beginner spends hours typing individual prompts into a chatbot, waiting for each response. The financial elite avoid this manual back and forth by using AI to orchestrate the work of an entire department. This shift relies on a concept called agentic AI. While standard chatbots respond to one prompt at a time and then stop, an agentic system pursues a high-level goal through a continuous cycle of planning and execution. This process starts with a single objective, such as build a profitable e-commerce store. The AI agent analyzes that goal and autonomously breaks it into subtasks. It researches market trends, builds the storefront, and monitors the results in a loop. These agents use specific subtools to execute each step. One agent scrapes competitor data, while another writes the product descriptions. If a task fails, the system evaluates the error and attempts a different approach until the original goal is met. By delegating the planning and self-correction to these autonomous loops, the wealthy remove themselves from the daily labor cycle. They use the technology to manage the operations that usually require a human staff. In the financial sector, billionaire investors have moved away from standard robo-advisors. They rely on predictive platforms that operate at a level unavailable to the average retail trader. Traditional analysts typically study historical earnings reports to guess future performance. Elite AI systems instead ingest alternative data to measure a company's health in the present moment. This alternative data provides a real-time view of the economy. These systems analyze satellite imagery to count cars in retail parking lots, track global weather patterns to predict crop harvests, and use sentiment analysis on millions of social media posts to gauge public opinion. When the data reveals a disruption, like a supply chain delay or a sudden regulatory change, the AI models the impact and adjusts the portfolio across 50 different markets in milliseconds. This system acts on the information before a traditional price chart even shows a decline. Human analysts are restricted by the speed of manual research and data entry. A chaotic trading floor cannot process thousands of global data points simultaneously to make a rational decision in a fraction of a second. These systems also employ dynamic risk management. They continuously stress test a portfolio against simulated global crises, identifying vulnerabilities months before they appear in standard financial news. During market downturns, these autonomous systems often increase a user's net worth by identifying arbitrage opportunities while the general public is still reacting to the initial crash. Beyond the stock market, the elite use AI to secure high-value business connections and investor meetings without traditional cold calling. Standard outreach often fails because generic email templates are easily identified and ignored by high-level executives. Elite users deploy AI agents that act as investigative researchers. The software scans a target CEO's digital footprint, including recent podcast interviews, social media posts, and company filings, to build a customized profile of their current business priorities. The AI then drafts an outreach message referencing a specific comment from a recent earnings call or a goal mentioned in an interview. This level of personalization allows the message to bypass spam filters by appearing as a relevant human-to-human connection. Once a meeting begins, conversation intelligence tools analyzes the audio in real time. The AI identifies buying intent, logs specific action items, and summarizes financial cues that a human listener might miss. This creates a scalable business engine. The AI handles the data gathering, the personalization, and the automated follow-up, while the human owner focuses on the final strategic decisions. While millionaires use these AI tools to grow their businesses, the billionaire class focuses on the infrastructure that makes all AI possible. During the California gold rush, merchants selling pickaxes and shovels built the most consistent fortunes. The current AI boom is repeating this pattern. The modern version of the shovel is the massive cloud infrastructure required to process global data. Larry Ellison and other tech architects built the foundational networks that every AI agent must use to store and retrieve information. The owners of the foundational models, like Sam Altman, capture value every time a business integrates AI into its workflow. They own the intelligence that powers the automated subtasks. But this intelligence requires massive physical compute power. Jensen Huang and his peers control the supply of high-performance GPUs, the specialized chips that every AI transaction requires to function. Professional investors like Mario Gabelli adjust to technological shifts by owning the underlying mechanics of the change. They prioritize the hardware and services that the entire industry depends on. This creates a consistent profit engine. By owning the infrastructure, these individuals receive a fraction of a cent for every automated AI action taken globally, from a stock trade to a personalized email. Treating AI as a simple calculator ignores the speed at which these autonomous workflows are built. In this automated landscape, the advantage belongs to those deploying the automation, while those in the manual labor loop are being replaced.